Greg Martin, the Entrepreneur's Banker here. And over the last 15 years, I've worked with some amazing entrepreneurs, and I've learned that the most successful ones are flexible. Now, COVID has taught us that we need to be operationally flexible, but I am obsessed about teaching you how to become financially flexible. What is financial flexibility? Financial flexibility is about maximizing every aspect of your business finances in order to help you to be reactive, to shift, to pivot, to grow, to be able to respond to what's going on. I think of it as a balance between cost and responsiveness or reactiveness. For example, you might be able to pay in a supplier early in order to get a 1 or 2% discount. So you are reducing your cost, monetary cost, but you're giving up your responsiveness, or you're be able to react because you no longer have the cash. So financial flexibility is finding that sweet spot that you can maximize the two. Before we go any further, I have got a special treat for you. I've got a financial flexibility tool that I've actually put together. So send me an email and I'll go ahead and I will respond back to you. I'll send the tool to you. And I've actually got a special gift for the first 5 emails that I've get. So make sure that you send it to me. So let's talk about the sources of financial flexibility. Financial flexibility can be found in cash and availability in the line of credit. I love cash as the primary source of financial flexibility because you can use it for absolutely everything and you don't owe anybody for it. But that cash needs to be in the business. And a lot of entrepreneurs have learned through COVID that they don't have near enough cash in their business. Some entrepreneurs I talk to have less than 10 days of operational cash in their business. That means if you had 0 revenue coming in, how long can you sustain the operations of your business? I recommend having between 90 and 180 days of cash in your business. So if you don't have a vault account, if you don't have a strategic reserve account, I strongly recommend that you go and you open one up today. And then you can start funding that account by taking 1% of every single deposit and just moving it over in that account. If you can run your business on 100% of your deposits, you can run your business on 99% of your deposits. That's a little profit first trick for you. Now, I understand that there may be some tax implications or some perceived tax implications with this. So make sure you talk to your tax advisor, you figure out what that is. But at the end of the day, you need to have between 90 and 180 days of cash on hand in order for you to operate. That includes making all of your loan payments. The second form of financial flexibility is your line of credit, or the availability on your line of credit. And I'm not saying that this is a bad thing at all. This tool allows you to basically borrow against your future earnings in order to take care of operations and to fund cash needs today. But it's not as good of a tool for financial flexibility because you still have to pay it back. And again, having that financial flexibility means you not being told by anybody what to do with your money. And with a line of credit, you've got to pay it back. It's a short-term borrowing need. You borrow on it, and then as soon as you get that money in from your clients, then you pay it back. And so it could be a good tool, but you realize that it is a short-term borrowing need. Secondly, you also need to kind of look at your line of credit and the availability or the amount that you can borrow on that line of credit. For example, if you have a $500,000 line of credit, but you look back and in the last 12 months, it has never gone below $450,000, well, then you really don't have a $500,000 line of credit. You have a $50,000 line of credit. So allowing and understanding that you're using it properly and saying, okay, if I pay it back, then I've got the ability to borrow back against it. But using a line of credit does provide a lot of financial flexibility, but it's not the best. Okay, who's ready for some financially flexible exercises? I've got 2 of them for you today. First off, we're going to talk about and we're going to determine how many days of cash you have on hand. So I want you to pull out your financial statement, your tax returns, or your income report, and I want you to add up all of your expenses, your operational expenses and your cost of goods. Then I want you to eliminate, or I want you to take out any of those accounting expenses that are non-cash, like depreciation, amortization, stuff like that. I want you to also take out your interest expense, and then I want you to add back what your loan payments are, your principal plus your interest. And so that is your total expenses. You divide that by 365, and that is how much it takes to run your business for one day. Then you're going to go to your balance sheet for the same period, and you're going to take the amount of cash that you've got, divide it by your daily expense, and that's how many days of cash you have on hand. If you have more than 30 days, let me know. I want to celebrate with you, and I want to learn how you're going to go from 30 to 180. If you don't, if you've got less than 30 days, then let me know that too, so that we can talk about how to get you to 30 days, 60 days, 90 days. And the second thing is if you don't have a vault account, if you don't have a strategic reserve, you need to call your banker up today and you need to open up a savings account. And then every time you make a deposit, I want you to start putting 1% of that deposit into that vault account. Well, that's going to wrap it up for today. Make sure you send me that email so I can send you the Financially Flexible Assessment Tool. And join me next time when we talk about finding financial flexibility in your loan structure and your borrowing structure. Until then, this is Greg Martin, the Entrepreneur's Banker, wishing you success, peace, and flexibility.